Commodities have come under pressure over the past few months amid these recession fears. How close are we to the bottom for crucial metals and forms of energy? We are joined by Scott Bauer, CEO of Prosper Trading Academy. Scott, great to talk to you again. Can we kick off with gold? Of course, some people say it's a form of money, but let's treat it as a commodity right now. You think gold is near its bottom?
I do, and it did bounce off its low last week, low that we've seen since like March of 2021. It gained a little bit coming off some safe haven interest, if you will, which we really haven't seen a lot recently, but more so because of the dollar, because the dollar has backed off its just incredible amount of strength that we've seen over the last few months. So the dollar is softening a little bit. 10-year yields came down, but the bottom line with gold is it's really in the crosshairs of, you've got elevated inflation, recession, and a flight to quality on one side. And then the other side, you've got continuing rate hikes, which we know we're going to get, the strong dollar, even though it's come off a little bit, and kind of weak demand. So it is in the crosshairs, but I see it bottoming. I really do. And it would not surprise me at all to see a run towards 1750, especially if, depending what the Fed does this week, 75 points is on the table. That's most likely. And depending on how aggressive the rhetoric is, I could really see us making a run to 1750-ish.
Oil, 1750-ish. You don't see it, gold breaking through the $1,800 level?
Not anytime soon. Now, listen, if we happen to get just economic numbers, GDP is not as bad as people are expecting, and these numbers continue to be weak, then we could see the Fed actually pull back a little bit. So that would be the impetus to see gold really rally here, but I don't see that happening in the near term.
What about oil? Do you think it has a decent shot at getting above $100 again?
Absolutely. And, I sent you some notes about an hour and a half ago prior to oil being up 1.5% or 2% today. And I think we just came off too quickly. There is obviously very big concern over global demand, which has been some big pressures the last couple of weeks. And, people like to see oil lower, but I think it's just backed off too quickly, quite frankly. And I think we're going to see a 100 print here sooner rather than later. There's also some news about Libyan output may come back to the marketplace here, which would help supplies. But I really think we're going to see a 100 print. And I do think that we'll remain in a range of about 94 to 102 for the foreseeable future.
What about U.S. natural gas? Those high temperatures have helped to inflate it. Would you try to ride natural gas higher at this stage?
Boy, it's really one of those. Are you going to go with the momentum here, or are you going to be against the grain? And for right now, I'd say you got to ride the momentum. Though I will tell you that I know a lot of the weather outlook here, at least in the U.S., is supposed to be for some very cooling temperatures over the next week or two. So I would be really careful on any acceleration to the upside there in natural gas.
Where are you based, Scott, yourself?
I'm in Chicago. So, we haven't had it as bad as much of the rest of the country. In fact, we've had, mid to high 80s, but by the end of this week, we're supposed to be down into the lower 70s. So we have not had it as bad as other people.
You're our Great Lakes neighbor. I hope to get back to Chicago before too long. Amazing architecture, among other things. Lumber, what's the pattern here for lumber?
So lumber, it has been maybe more volatile than any commodity over the last couple of years. We see a housing slowdown, which is not going to be great for the housing or for the lumber market here. But something really interesting that is happening here at the CME, there's going to be a new contract. Whoops, sorry about that. Are we still here?
Yeah, we got you.
Okay, yes. Okay. At the CME, there's a new contract coming out in a couple weeks on August 8th. The lumber contract is going to be a quarter the size of the current contract. So we may see a huge influx of volume of lumber futures trading. But what that's going to do, in my opinion, is really consolidate the market, take a lot of volatility out of the market. So I think we could stay in a very, very tight range in lumber over the next quarter or so, especially with the cooling of the housing market.
Just give us your thought on corn, Scott. We're tight for time.
Yes, wheat, corn, soybean. With the weather patterns here in the U.S., I think there's going to be some upside in the near term.
I think we're having a bit of trouble with Scott's camera there. There is corn. So you can see corn is still up 6%. A lot of these commodities, wow, corn has dropped below where it was when Russia attacked Ukraine in late February.
Yes, it has.
Quite a lot of these commodities have just given up their post-invasion gains. We're looking at wheat there, Scott, still up 13% in the past year. There are doubts, of course, about how effective that deal under which Ukraine would export grain. And there is soybean. We know that palm oil prices have come off their highs. Scott, what do you think? Are we in for a second? I know it's very hard to generalize about commodities, but are we in for a second right higher, do you think?
I do think we are. I really do think we are. I think the massive amount that we have seen in the decline across the commodity space over the last weeks, month or so, I think that's going to level off, and we probably do make a run higher across the board.